In today's episode, I'll talk about two interesting stories. In the first one, I'll talk about how Donald Trump's chaotic trade policy is completely changing global markets and what it could really mean for India. And in the second story of the day, I'll talk about why copper is quietly becoming one of the world's most important metal and why we may not have enough of it. Welcome to the Daily Brief Show by Zerodha, where our aim is to cut through the noise and simplify the biggest news and stories in the financial markets in a way that is easy for all of us to understand, yet one level deeper as compared to your traditional news channels. I'm your host Anurag Bansal, and today is Friday, the 16th of May. To be very honest with y'all, it's very hard at this point to keep up with whatever is happening with American trade policy. Every week sort of seems to bring in a new announcement, a dramatic reversal, or even a sudden outburst from the White House. And if you have ever found yourself tuning out or zoning out of this, or maybe feeling overwhelmed by the sheer volume of the updates, well, the honest answer is you're not alone. But the reason people still keep a close eye on what America is doing, especially under Donald Trump, is very simple, and that means that every little policy shift, tweet, or even a simple speech from the US president can directly affect whether a country like ours gains or loses access to billion-dollar market opportunities. And therefore, even when things feel very chaotic, it is way too important for any of us to ignore what is happening. So therefore, let's try and make some sense of what's going on right now, because something very specific has changed recently. See, after months of a full-blown trade war, especially between the US and China, there finally seems to be a pause on what's happening. Not a resolution as such, but almost like a ceasefire of sorts. Now, just a few weeks ago, Trump had imposed steep tariffs on imports from several countries, including ours in India. The idea was basically to make things reciprocal because his administration claimed that the US was being taken advantage of and that they wanted to level the playing field by raising duties on goods that are coming into America. But that said, China was hit the hardest here. The US and China got locked in a tit-for-tat battle of sorts. Every time the US raised tariffs on Chinese goods, China responded by slapping tariffs back on American goods. And by the end of all of this drama of sorts, tariffs had climbed to triple digits, over 145% in some cases. And this was not just about tariffs as well. China also hit back with non-tariff barriers, things like blocking American companies, launching investigations, and also banning key US imports. But on May 12th, both of these countries decided to take one step back. They issued a joint statement and announced a 90-day pause on new tariffs. Now, for this period, American tariffs on Chinese goods dropped to 30% from the previous 145%, and China also lowered its tariffs to 10% from the previous 120%. China also promised to withdraw some of the non-tariff countermeasures that it had put in place. Now, let me remind you, this truce is not permanent as such. It is more like a breathing window of sorts, because both the sides now have 3 months to come up with a more long-lasting arrangement. But what it's for sure is that it's a major shift from the escalating tensions that we were seeing just a few weeks ago. Now, interestingly, while both countries are claiming victory here, many experts believe that China managed to outlast the US over here. When tariffs started to hurt, China stimulated its domestic economy to manage the impact, while trade within the US sort of collapsed. Now, that may have pressured Trump to back down, but still it is likely that both sides are quietly relieved to hit pause button here. Now, that said, it is very important to note that this does not mean things are going back to how things were before. The US is not really removing all tariffs. It is just freezing the situation for now. And that means that the baseline 10% tariff on most imports is still very much in place. And from the way things are being talked about, that 10% duty might become the new default in American trade policy going forward. And because of this temporary pause, many countries are now rushing to cut deals with the US while they still can. The UK, for example, has already signed one. It's sort of a narrow deal, and the US has not really rolled back the 10% tariff, but it has made some concessions, like allowing a fixed quota of British cars into the US market under the current tariff structure. Now, that is a win for Tata Motors, by the way, which owns Jaguar Land Rover. And in return, the UK is offering some tariff relief for American goods. But anyway, coming closer to home in India, we are also moving quite fast here. From all indications, we are trying very hard to strike a deal before the 90-day window closes. Some reports suggest that India is offering to cut tariffs on American imports quite significantly. Currently, India's average tariffs on US goods are around 13%. We are apparently willing to drop that to below 4%. In fact, we have reportedly offered to make 60% of those products entirely duty-free. We are also ready to give preferential treatment to 90% of American imports. Now, that includes faster clearances, lesser paperwork, and better faster access than we give to products from most other countries. And in return, what we are asking for is exemptions from current and future American tariff hikes. And we are also hoping that the US will consider India a trustworthy destination from sensitive technologies, especially emerging areas like artificial intelligence and biotechnology. Now, if India can pull this off and get trade terms better than competitors like Vietnam or Bangladesh, it could be a massive boost to our government's Make in India push. But the thing is, we are also keeping a backup plan ready just in case all of this does not work out. See, alongside negotiations, India has also informed the World Trade Organization or the WTO that we are considering imposing retaliatory tariffs on US goods. Now, this is in response to American tariffs on steel and aluminium. And while we have not yet received which American products might be targeted specifically, the message is fairly clear, which is that we are willing to retaliate if talks do not really go our way. But all that said and done, we probably should not expect too much here. The US Treasury Secretary has already told Japan that the 10% baseline tariff is non-negotiable under any circumstances. Now, that likely applies to India as well. What's being offered to us are limited relaxations around that base rate, not really a full rollback as such. Anyway, let's move on and now talk about something else that has recently changed, which is very important, and that is chip policy. See, under President Joe Biden, the US had introduced a complicated export control framework, which is called the AI Diffusion Framework. The idea was basically to regulate how AI chips, especially the advanced ones, were shared with other countries. For this, the world was basically split into 3 different tiers, and only the US and 17 other countries were getting unrestricted access to these particular chips. Everyone else, by the way, which includes India, would have to go through a lot of red tape. Trump's team, though, has now decided to get completely rid of that framework. His Commerce Department called it too bureaucratic and even unenforceable. And that is because it turns out that the policy was actually making it harder for the US to strike trade deals with other countries that it wanted to partner with, like the UAE and Saudi Arabia, which are very important suppliers of lithium and other critical minerals. And now, with China trying to get access to these resources, the US did not really want to create any amount of friction with the rest of the world by cutting them off American technology. One more reason here is the scrapping framework. It was backfiring. By restricting access to US-made chips, the US accidentally gave Chinese chip makers a lot of room in order to grow. Huawei, for instance, has developed its own AI chips under the Ascend 910 series. Now, they are obviously not as powerful as Nvidia's chips, but they are good enough for building AI models. In fact, China's DeepSeek, which is by the way a major AI company right now, is reportedly only using Huawei chips for its new models. And if the US cuts off access to its own chips, companies like Huawei could dominate global markets by default. So now the US Bureau of Industry and Security has been asked to stop enforcing the old framework. A simpler version is expected soon, and that news sent Nvidia's stock price soaring of sorts. But we don't really know yet what the new rules will be. Will India benefit? It is too early to say. There is definitely a possibility that the US might try to negotiate individual chip deals with each and every country instead of having one big framework. Now, that approach fits Trump's style, which is more transactional of sorts and more one-on-one. And at the same time, the US is also cracking down very hard on Huawei. They claim that Huawei is building chips using American software and technology, which is in violation of existing controls. The US has now warned that any company anywhere in the world which is using Huawei chips could face legal or administrative action. American firms have even been told to perform due diligence on their customers and ensure that no one in the chain is using Chinese chips. Now, that raises big questions about how enforcement will work across borders, but it is clear that the US is very serious about limiting Huawei's reach here. Now, the thing is, while all of this feels like progress to many of us, especially compared to the chaos just a month ago, the thing is, it does not really mean that things are suddenly stable. There are still a bunch of unpredictable trade moves that are coming out of the US. For instance, Trump recently announced a 100% tariff on foreign-made movies. Yes, movies. He claimed that they were a national security threat. Now, no one's quite sure about how this will even be implemented because films are not really shipped in containers like physical goods are. So therefore, there is no easy way to apply a tariff at the border. And therefore, this announcement has mostly confused everybody. Then there's also a new rule for drug prices. Trump apparently wants pharmaceutical companies to sell medicines in the US at the same low prices that they offer in other developed countries. Now, this is called the most favored nation rule. And if it is implemented, it could be great for American consumers and also for Indian generic drug makers who sell some of the cheapest medicines in the world. But there is again a twist to it. The US Trade Representative has just added India to its priority watch list for failing to protect pharmaceutical patents. And that could end up cancelling out the potential advantage that we could have here. And then there is something that unexpectedly happened recently, which is that according to some reports, Trump casually told Apple CEO Tim Cook that he does not think that Apple should manufacture iPhones in India. India. No context, no details, just that statement. Now, of course, we don't know if that's policy, opinion, or just another regular passing comment. But just in case it holds true, it will have a lot of significance to us. So if I were to quickly summarize everything here, right now we're in a very weird moment of a temporary calm, but with a long list of unresolved risk. A trade war that looked like it was spiraling out of control is now sort of on pause. Countries are rushing to cut quick deals, which probably was always Trump's plan, and the US is rethinking some of its most disruptive policies, especially around technology. But the baseline tension, which is unpredictability, still remains very strong. Now, for India specifically, this moment is both an opportunity and a risk. The thing is, if we can negotiate favorable access, especially on chips and exports, we could seriously see a big upside. But if things start to go south, or if Trump's policies start to take another sharp turn, we could be back in trade limbo all over again. On that note, let's move on and talk about the second story of the day. See, there is a metal that pretty much powers everything around us. Right from the wire in your phone charger to the cables that carry electricity across cities, and also to the guts of electric vehicles and solar power plants, it is everywhere. That metal is copper. And while it may not be as flashy or popular as gold or as controversial as coal, copper is quietly now becoming one of the most important building blocks in the modern era. And it especially now because countries everywhere are trying to move towards greener and more electric futures. This week, the United Nations Conference on Trade and Development, or the UNCTAD, released its latest global trade update. And the spotlight this time is squarely on copper. And to be honest, the report sounds a bit like an alarm. If the world is serious about its green ambitions, we are going to need a lot more copper than we currently have. And we may not be ready for what it actually means. Let me slow it down and break this down properly because this is very important. See, at its very core, copper is a fantastic conductor of electricity, which is something most of us would know at this point. And that is why it is used in everything, right from house wiring and circuit boards to high voltage transmission cables and even electric motors. And compared to alternatives like silver, which by the way is a better conductor but is ridiculously expensive, copper is the perfect sweet spot between performance and affordability. But the real reason copper demand is exploding today is because of the green transition. To put it very simply for you, a more electric world needs more copper. Electric vehicles, for instance, need more than 3 times as much copper as petrol or diesel cars. A battery-powered electric vehicle might use up to 1000 kilos of copper, while a regular internal combustion car uses just 23 kilos. And it's not even just about cars. When we switch from fossil fuels to renewable energy like solar power in remote deserts or wind turbines out at the sea, we need massive new power lines to carry that electricity to cities. Now that means hundreds and sometimes even thousands of kilometers of new wiring. Again, that requires more copper. So now we know the demand is rising. But the question then is, how much more copper are we really going to need in reality? See, different organizations have very different estimates, but they all agree that it is going up. The United Nations, for example, thinks that global copper demand will rise by more than 40% by as early as 2040. The International Energy Agency predicts about a 50% jump, and Goldman Sachs says that if the world really tries to follow a strict net zero path, we will need about 54% more copper by 2030 itself. But the problem and the biggest catch here is that we do not have enough supply to match all of this demand. In 2023, the total refined copper produced around the world was around 26.6 million metric tons. But in order to avoid shortages, UNCTAD says that we'll need to build around 80 new copper mines and invest at least $250 billion by the end of this decade. Now that of course sounds ambitious, but what makes it nearly impossible is the fact that opening a new mine is not like opening a new factory by any means. On an average, it takes 17 years to open a copper mine. In fact, some recent estimates show that it could take as long as 25 years also. And that means that even if we start building a new mine today, right now, we might not see copper from it until as early as 2050. That, mind you, is 2.5 decades away, and nobody of course knows how the world will look like or the demand will look like at that point in time. It's basically a risky generational investment. And by the way, even when a mine does get built, there is absolutely no guarantee that everything will run smoothly. Many copper mines are located in ecologically sensitive or politically volatile areas. Over half of the world's copper mines are in regions where water is already scarce. Copper mining, by the way, uses a lot of water and energy and can really pollute local local ecosystems, which could lead to pushback from communities and also governments. And to make things worse from here, we cannot always count on tapping older, unused mines in emergencies. Many of them have already been heavily exploited, or the quality of copper that is left in them is way too low for us to use. And the reality is, even if we hypothetically stopped pushing for electric vehicles or renewable energy, we would still need copper. It is in your home's electrical wiring, in every single appliance you use, and in almost every electronic device, from laptops to mobile phones to everything else as well. So the demand is not a passing trend by any means whatsoever. It is foundational to the modern life that we live today. And like it is with most things in markets, when the demand rises and supply cannot keep up, prices start to swing wildly. So therefore, after a little bit of slump in the 2010s, copper prices have become very volatile once again. They hit an all-time high in May 2024, which is over $5 per pound, and they spiked again in March 2025. And needless to say, these price fluctuations have a ripple effect on everything that copper touches, right from car prices to infrastructure costs. Anyway, now let me zoom out a little bit and talk about where copper really comes from and where the real money is made, because that is the part of the report that many people might overlook but is very important. See, the copper value chain, right from raw ore to finished products, is where the story gets the most interesting. At the very bottom of the chain is mining, which is digging copper ore out of the earth. Now, more than half of the copper ore reserves are concentrated in just 5 countries. China has 20%, Australia and Peru have about 10% each, which is followed by Democratic Republic of Congo and Russia at 8% each. Now, this concentration gives them power, just like how oil-producing nations once formed OPEC to influence oil prices. Anyway, after mining, copper ore needs to be smelted, which is a process that extracts usable copper from the rock. Countries like Zambia and the Democratic Republic of Congo play a big role here. Now, interestingly, Germany is the world's top exporter of copper mats, which is a semi-processed form of copper. Anyway, once copper is smelted, it then has to be refined into its pure form. And that part of the chain has seen a massive geographic shift. Back in the 1990s, Asia produced just 19% of the world's refined copper. But today, it produces 60%, and the center of it all is, guess who? China. See, China imports around 60% of the world's copper ore and produces more than 45% of all refined copper. In 2003, they were importing just 17%, to give you a reference. So basically, in just 2 decades, they've practically completely taken over the copper refining world. But anyway, back to the process. After the process of refining comes the process of fabrication, which is turning copper into useful products like wires, sheets, rods, and tubes. Now, this is where most of the value gets created. Wires alone account for over 60% of copper usage globally. China, Germany, Japan, and the US dominate this particular part of the supply chain. Now, what's interesting is that the countries which mine the copper, like Chile, Peru, and the Democratic Republic of Congo, are not at all major players here. They mostly export the raw stuff, and the others make money turning it into finished goods. And that brings me to recycling, which is the unsung hero of the copper economy, so to speak. See, in 2023, recycled copper made up nearly 20% of the global output. Copper ore is one of the most recyclable metals because it performs just as well the second time around, and it's far less harmful to the environment. In fact, it's a lot cheaper and greener also to recycle copper than to dig up new ore. And the leaders in copper recycling are the US, Germany, and Japan. Again, none of the big miners are in this club at all. But as useful as recycling is, it cannot really fully bridge the gap that we require. Even optimistic forecasts say that recycled copper will meet only about 75% of demand at tops. And that basically leaves millions of tons of copper that we will as a world need to find from newer sources. And that is where a very frustrating twist comes into this story. See, if copper-rich countries want to climb up the value chain and export wires or tubes instead of just raw ore, they run into one new problem, which is tariffs. See, refined copper usually faces low tariffs, which is under 2%. But the moment you try to sell more advanced copper products like pipes or wires, tariff rates suddenly shoot up, sometimes to as high as 8%. And that, of course, discourages poorer countries from building up local manufacturing. Richer countries want the raw material, but not the competition in value-added products. And that kind of trade friction has only gotten worse with time. During Donald Trump's presidency, the US has hiked tariffs on copper goods from China. And it's not just the US, many countries, including ours in India, are becoming more and more protective about our critical resources as time passes. India, in fact, is the world's second largest importer of refined copper, and that is not at all ideal for our trade balance. So in order to fix this, the Indian government has now started imposing quality control measures on imports to push for more domestic production. But the question then is, can India really be self-sufficient in copper? Let's take a look. See, India's copper demand has grown very rapidly from about 5 lakh tons in FY 2017 to nearly 8.5 lakh tons in FY 2024. But in the bigger picture, we are still a very small player in copper. Our mining capacity is very tiny. Hindustan Copper Limited is the only domestic producer and it extracts just 25,000 tons of copper concentrate every single year, which is only 0.1% of global output. Now, India actually has quite a bit of copper ore, which is about 1.66 billion tons. But the catch is that less than 10% of this is actually considered reserves, which means ore that is economically viable to mine for us. And even among the ore that we do mine, the copper content is very low at about 1%. And that basically means that for every 100 tons of rock that we dig up, we just get 1 ton of usable copper. So basically, instead, we rely on heavily importing copper concentrate and refining it domestically. Big players like Birla Copper or Hindalco, Vedanta, and now even Adani with its new Kutch smelter are leading the charge here. This could help us reduce import dependence, but we are still far behind China. In terms of making finished copper products, India does better though. We manufacture wires, rods, and foils. But when it comes to more advanced goods like tubes and specialty parts, we still import a very large chunk. And finally, on the recycling front, we also have a very long way to go. India generates a lot of copper scrap, but most of it is actually handled by informal recyclers. Only around 35 formal recycling units exist in our country, which is a huge opportunity sort of waiting to be formalized. So the question then is, are we in trouble? See, not necessarily. History has actually shown us that the world has often panicked about running out of critical resources, only sort of to be proven wrong by innovation or new discoveries. People thought oil would run out in the early 1900s, but it did not really. They then panicked again in the 1970s and then in the 2000s. And every single time we found new ways to extract more. The same might actually end up happening with copper because of new technologies, improved recycling, and better substitutes like aluminium or even graphene. And who knows, maybe we'll use less copper in the future than we expect right now. But anyway, all said and done, one thing is very clear, that copper is no longer just a commodity, it is becoming very strategic to different countries. And if our country India wants to secure our economic future, we will need to take copper more seriously, not just in mining, but in refining, fabricating, and also recycling. As the UNCTAD report says, the age of copper is here. But the thing is, unless we play it smart, the benefits might only flow to a very few. And that brings me to the end of the two stories of the day. On that note, let's move on to the final section and talk about the quick news headlines. First, India's edible oil stock at ports and pipelines fell to 1.35 million tons as of May 1st, 2025, which is the lowest level in 5 years according to the Solvent Extractors Association of India or SEA. This decline was primarily driven by a sharp 24.29% drop in palm oil imports in April, which fell to 321,446 tons, which is the lowest in the last 4 years. Second, India's domestic car sales to dealers rose nearly 4% in April 2025, reaching nearly 350,000 units compared to about 335,000 units in the same month last year, according to the Society of Indian Automobile Manufacturers or SIAM. Third and the final one for the day, India's Union Cabinet has approved a 3.7 thousand crore rupees semiconductor manufacturing plant by HCL Group and Taiwan's Foxconn, which is to be located near Jewar Airport in Uttar Pradesh. The plant will have a monthly capacity of 20,000 wafers and it is expected to produce up to 36 million display driver chips every single year. That's all the news and stories I have for you today. I hope you enjoyed this show. This is your host Anurag Bansal signing off. Take care and goodbye. Disclaimer: this content is for informational purposes only. None of the stocks, brands, or products mentioned are recommendations or endorsements.